The Federal Reserve has decided not to continue cutting interest rates after their latest meeting on January 28th. After 3 consecutive rate cuts to finish off 2024, the Federal Reserve has decided to pause rate cuts after December inflation numbers were higher than expected. This marks the first time since July that the Federal Reserve has decided not to cut interest rates. Let's see what led to this decision and how that's going to impact you as an everyday consumer. Throughout the second half of 2024, over 3 interest rate cuts, the Federal Reserve had cut the interest rate by a full point. And this was all in hopes to stimulate the economy, as they were seeing a slowdown in the economy and inflation was under control. However, during the latest meeting, they decided to keep their interest rate at the current levels, which is between 4.25% and 4.5%. Several factors influenced this decision, and one of them being a stronger than expected US economy, as we saw job growth actually increase in December of 2024, and that brought down the unemployment rate to just 4.1%. You see, normally when rates are high for an extended period of time, we see a slowdown in the economy and therefore an increase in unemployment. Also, with high interest rates, there should be less consumer spending, which directly leads to a slower overall economy. However, we are not seeing this right now, as the economy is being resilient and we're still seeing high consumer spending. Inflation also remains a concern for the Feds, as we saw unexpected volatility in energy prices that increased inflation higher than they expected. Also, with the election of President Donald Trump and his introduced policies on tariffs, tax cuts, and mass deportations, this could all add inflationary pressure to the US economy. So the Feds are taking a wait-and-see approach to see how these policies will affect the broader economy before making a decision on whether or not to cut interest rates. So what does all this mean for you as the everyday consumer? Well, first, mortgage rates, auto loans, credit card interest rates are all going to stay high. So people looking to buy a home or buy a new car with financing are all going to still see struggles and make it difficult to qualify or afford these things, as the interest rates will remain high for the foreseeable future. And in my opinion, for the rest of 2025, I wouldn't expect a drop in interest rates on these things. On the other side of that, the good news is that high yield savings accounts are still paying pretty good interest amounts, some over 4%, and that helps a little bit take the sting out of all the inflation going on in the economy. I know the advice is repetitive, but the same goes for 2025. Avoid buying a house or buying a new car if you can, and avoid credit card debt, as the current interest rates will have you paying a lot more than if they were lower. Sometimes you'll pay even double or maybe triple the price of the home or the car with these current interest rates. And what makes it even more tough is the used car market is also still very high and a bad time to be a buyer. And we're all waiting for the car market to come back down to normal since the pandemic, when it's gone crazy. But a big part of that is interest rates. And right now, with the high interest rates, prices and affordability on vehicles, whether new or used, is going to be very tough for most consumers. I know the struggle, as I've been thinking about buying a new car, but I've been waiting since 2023 until the car market is better, and a large part of that is interest rates. Remember, discipline and delayed gratification are the keys to success. And if you can hold off and be responsible financially, it will set you up later in life. I know it's difficult times right now in the economy, and most people are just trying to stay afloat and make it through the storm. The next time the Fed will meet is in the middle of March and then early May, but I doubt those 2 meetings will result in any rate cuts given the situation of the economy and how things are going. Realistically, I think the earliest a rate cut could come would be during the June meeting for the Federal Reserve. However, even then, I don't think there's going to be a rate cut, or if there is one, it'll be a very small 0.25% of a rate cut. And I think there's only going to be maybe 1, maximum 2 rate cuts for the rest of 2025, if any. If you want more videos on real estate, personal finance, or travel hacking, subscribe to my channel and follow my journey.